All right, guys, back to work. One more day left this week. Hope you had a fantastic day out there. What a beautiful deep pullback and that picture-perfect double top reversal. But you know how we roll, right? Back to work tonight. We got more to do tomorrow. We're getting ready for Friday's trading session. I have a ton of money-making opportunities for us on our radar for tomorrow. You know me. I'm going to cover all my favorite trades in tonight's video. Then we get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, if you guys enjoyed this video tonight, help me out, will you? Hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Friday. Thursday was pretty good. Friday could be better though. Where are the money-making trades? Where's the 5x, 10x easy money trades for tomorrow? As you can see right now, the S&P and the Nasdaq are both range-bound, but bullish, right? So we got bullish momentum here on the Nasdaq, bullish momentum here on the S&P. Buyers definitely have momentum at their back right now. They love to get some breakouts going higher. I've got 3, maybe 4 breakouts. We get some big news coming out of China overnight, so I want to make sure we're ready for some possible big moves higher here. We got a couple breakout patterns I'm watching here on our radar for tomorrow. And as I mentioned in last night's video, we still have an overall bear bias right now. So as these things go higher, we definitely are watching for some reversals off that high right now. So I will not shy away from the bull breakouts, but you know, in these long-term bear markets, those big reversals off the high are definitely something we're watching for tomorrow on the Nasdaq and the S&P. I'm going to cover those trades here in just a moment. Oil, you'll notice here, is also range-bound. Oil is bearish and range-bound right now. Bears would love to get that breakout down to the $80 big round number. Buyers would love to get a reversal off of that low. We get some breakout trades on the oil. We get some reversal trades on the oil. I'm getting excited just talking about this right now. So let's get into this here tonight. Before we jump in, though, we'll get all the trades talked about here tonight, though. Let's make sure we all get on the same page tomorrow. There isn't a lot of news on the typical schedule tomorrow, but you do want to be aware, though, of course, we do have some Fed speakers tomorrow, 10 o'clock and 12 o'clock in the afternoon tomorrow. There are some Fed speakers, but I think the big news is really what's happening overnight. Tonight, we have the Chinese CPI and the PPI numbers, and those are some of the biggest inflation reports that we see as traders. We know that here in the US and in Europe, and watching those PPI, CPI numbers, right? Consumer price index, producer price index. So we get some big inflation reports coming out of Asia overnight. That's why I said earlier, we got to be ready for some really big moves here happening in the overnight. So we're ready for a game plan tomorrow morning. So overnight news coming out of China, CPI, PPI, keep that on your radar. And you'll also notice too, we have the emergency energy meeting in the EU. That, of course, will happen right in the London session here in the pre-market overnight for the US session. That could be talking about more stimulus. We've heard a lot about stimulus packages out of Europe over the last few days, and stimulus does tend to get the markets moving, so we'll definitely be watching that as well. So keep an eye on the Chinese CPI and PPI coming overnight, and be aware of that energy meeting tomorrow at the EU. And then we'll see if Evans, we'll see if George can spice things up tomorrow. But if I had to guess right now, I would guess the big activity happens overnight, and then tomorrow we're trading that reaction to it tomorrow morning in our trade room. Also, don't forget too, we are watching rollover on the E-minis. We're currently on the 922 contract on the S&P, the Nasdaq, the Russell, the Dow. We are watching volume closely right now to see if that volume rolls over to the 1222 contract. If it does roll, if the volume is higher on that 1222 contract tomorrow, we will make the move over and trade that 1222. If it's not, we'll push it back to next Monday. Oftentimes, they won't make the rollover right on rollover day, and they may make us wait until Monday. So just be aware of that. So lots of news happening overnight from China, from Europe. How will that affect us? We, of course, will find out in a few hours. Let's make sure we have our game plan ready for it. Back to our charts, though, guys. I'm going to cover all my favorite trades on these charts tonight. Whether you trade one of these markets or you trade all of them like we do in our trade room, make sure you watch all the way to to the end because you'll learn something new throughout the entire video this evening. I'll provide different trade ideas, different strategies as we go deeper into this video tonight, and I try to save the best stuff for the last, right, for the end, so I'll give you a reason to stick around all the way to the end. Why don't we grab the NASDAQ first? We'll go NASDAQ, we'll go S&P, and we'll wrap things up here, of course, on the mighty crude oil. Now, the NASDAQ, a 4,000 tick chart. You can see all the tick charts in the upper left-hand corner. Keep in mind, the NASDAQ and the S&P are very, very similar, so pretty much everything I talk about on these two charts tonight can be used interchangeably. NASDAQ can apply to the S&P and vice versa, so keep that in mind. NASDAQ first. You can apply most of the stuff, though, to the S&P. There are three key insights. Well, actually, two key insights. Again, we are watching rollover for tomorrow. This is the 9/22 contract. Be aware, we may be trading the 12/22 if the volume rolls tomorrow. First key insight, we do have a long-term bear bias right now. Look at a daily chart, look at a 60-minute chart, look at a 4-hour chart, and you can see we are overall bearish. Now, clearly the buyers have the edge right now, right? Every time the market tried to go lower, the buyers were there to gobble it right up. So buyers definitely have the short-term momentum on this chart right now. But again, as we talked about in last night's video, what goes up may easily come right back down because of that long-term bear bias. And then, of course, a trading range, right? That trading range right in the middle, that range, of course, acts like a magnet, right? All the volume piles up right in the middle of that chart. And because ranges act like magnets, we know that as we go higher, if these buyers, if they can't get a breakout going higher right now, we're going to likely end up right back down into that trading range, right? If the bears take it lower, if they can't get a breakout going lower, we're going to end up right back up into that trading range, right? So at this point right now, the buyers and the sellers both have opportunities right now. The buyers would love to get a breakout going higher. Buyers would love to buy off the low of that trading range. Sellers would love to get a reversal off of that high. And of course, sellers would love to get a breakout and go lower, right? Plenty of opportunities here to make money. And again, we have to be ready for, prepared for potentially some relatively large moves overnight because of the news we talked about a few moments ago. So let's talk about the move going higher here right now, right? That's kind of the momentum that we have here at the moment. I've got some channels on here just for illustration purposes at this point. Now, as we go higher, how do I buy it as we go higher here? There are really, for the most part, there are three basic types of breakouts that you want to look for in a situation like this. One of them is called a 1, 2, 3 breakout. Now remember, we have a lot of resistance up overhead. So as we go back to take out these highs, let's see if these buyers can come in. If the buyers come in and they can hold the pullback off the moving average and we can get a real strong jump off that 21 EMA, that's going to be what I call a 1, 2, 3 breakout. After I see a 1, 2, 3 breakout pattern, all of that momentum means I can probably buy a pullback on this. I'm going to go out, draw a trend line off the high. I'm going to go out, find a channel now off that low. And one of my favorite entries on this is right below one of those prior swings with either a trap setup or a failure setup or a pullback combination. All the same entry patterns I talk about in that free trading course on our website. So again, it's a 1, 2, 3. Remember, it's really going to jump off that moving average. That momentum is a really big part of this because all that momentum tells us is that I can probably buy that pullback. Now, that's one way to trade a breakout. I'm going to cover the short side on this in just a moment, right? So bear with me on this. As we go higher, what if we don't get a pullback and we go, right? What if the market pops up and begins to grind and grind and grind? We call these the pop and grind channel, right? My favorite dance move as we joke around in the comment section, right? It pops up, it grinds higher. Those grinders are easy giveaways. Draw a trend line up off those highs, anchor it way down here off that big channel low, right? Find that high off that low. And then what I want is again, I like to look left, find some of these prior swings and get in now off those prior swings. The bottom line is I want the first test. I want the first test off that channel. Okay, it could be, again, it could be any of the patterns you guys learned in the free classes, right? The traps, the failures, the pullback combos, right, as we go. Now, keep in mind on these first two breakouts, the size of that first leg is almost always the size of that third leg, okay? Trending markets love to go one leg, two leg, three leg, and the first leg and the third leg are very symmetrical. Okay, so just be aware of that as we talk about breakouts. Okay, so that first leg, again, measure that one. Once you know how deep that pullback is, take the size of that one, project it there, and that's going to give you some really good targets overhead. I have my levels, of course, waiting overhead where I think the market wants to go, right? But we'll kind of fine tune that with that first leg equals third leg. Here's another one that you want to be aware of for a breakout going higher, and this one will be if we get some big news overnight that really sends this market running higher. If the market really takes off and rips higher overnight, what you have to remember is anytime we see a big move overnight, people will come back to their desk tomorrow and they'll say, whoa, this is way too high to be buying up here. The bigger the move that we get overnight, oftentimes the deeper the pullback is going to be. Let me get rid of some of these levels here to keep it simple here. We really jump up, right? Real big move overnight. At this point, we have to assume professionals are not going to want to chase it. They're going to want to buy a really deep pullback, right? The same reason why you and I want to buy lower prices, buyers want to buy low, right? So as we now pull back, what you want to think about is you want to get underneath that moving average. What I'll do is I'll go out and find a bigger channel, right? Find some of these bigger channels. Remember, big move overnight, strong move, we're going to want to retest the high, try to get underneath that moving average, try to get down to the low of a bigger channel. I'll obviously help you guys with this tomorrow morning in the trade room, and then wait for those bears to come in and try to get short. Once the bears try to get short, now you've got their stops right on your radar, and you can use their stops for entries, right? Like a failure pattern, right? Failure pattern, or into a pullback combination, and then going back up to retest the high. And that is where we can definitely start looking for those reversals back down off that high, right? So again, big move, strong move overnight. Could be coming out of news. Whatever the reason is, we buy nice and low by trapping in those bears underneath the moving average, and then, of course, grabbing that first pullback on the way higher. Failure into pullback combo. You guys have learned that, right, in the free course. There's hundreds of examples of those failure into pullback combinations in that free class. And speaking of which, if you're one of the few folks right now watching this video who haven't taken the free course, and you haven't learned all these entry setups, right, I know most of you guys have, but if you haven't yet, what are you waiting for? I'll put a link up here for you. Grab that link that just popped up right there. The strategy that I teach in that free trading course will get you into more winning trades, help you avoid easy losses to avoid, and give you a ton of confidence. If you're like me and you hate missing the best trades each day, or you're taking too many losses, grab that free course link. It's perfect for someone trying to make the jump into full-time trading. Hundreds of examples of things like failures and pullbacks and traps, right, as part of that free class. So definitely grab that link right in the upper right-hand corner. Now, we've talked about 3 different types of breakouts, right? The 1, 2, 3 breakout, the pop and grind breakout, right? The big move and the deep pullback. Okay, how do we sell this market now? Okay, what if we make that big move up overnight, but now, as we pull back now to the moving average, the buyers try once, they pull back lower, the buyers try twice. This is what we call a crown reversal pattern. Remember, it's a long-term bear market right now, okay? We're bullish in the short term, but again, like we talked about last night, right? Buy that deep pullback, up to retest the high and dump it back down again. That's the idea for tomorrow, and pretty much as long as this market keeps on going higher inside of a long-term bear trend. Once you see that, now remember, 1 try, lower low, 2 tries, and then grab that short as the market drops from there. And then don't forget, as it goes lower, your job ain't over yet. Find that new channel low, mark it off that high, drill down, and don't miss that first test off the high of that channel. Make sense? right? So we pop up overnight, we pop up tomorrow morning, whenever that happens, we look for the buyers trying once to retest. They're going to want to retest, try once, they fail, we go lower low, try it again, and then grab that trap, right? That trap high, nice strong signal, and then of course, right, trap, failure, pullback off the high of that channel. Where do the bears want to go? They want to go back and bury those lows, baby. That's exactly where the bears want to go. They want to rotate to the opposite side of that trading range. That's one way I can sell off the high. Another way I can sell off the high, which is my personal favorite, is the double top reversal. So again, let's say we get that strong move higher, we get that deep pullback, we rope in the bears, run their stops, and go back and retest the high. Mission accomplished for the buyers. The professionals, the smart money, they're buying nice and low. We want to now see if we can rope in some of the inexperienced traders, some of the weak hands, right? Some of the traders who haven't quite learned these lessons yet, haven't paid their tuition to the market yet, and trap them in at that high. Horrible place to be buying. Let those buyers try once, let them try twice, and then think about now where their pain is. Think about now where their stops are and look for that nice juicy signal and sell right into those stop losses. And again, your job is far from over there. Now mark that new trend line off that low, trend line off that high, find that trap, get above the moving average, right? That's where failures come in, above the EMA. I don't care what entry pattern we get off that. Just don't miss that follow-up trade after that beautiful double top reversal into that first channel pullback, first channel test off the high. Targets, of course, are back down to retest the low. Those are some of my favorite ways to short it. But let's say we get a V-top. Right? Let's say we go all the way up and then come crashing back down from there. What do we do then? Here's one of my favorite V-top patterns to work with. We pop up. Now, at this point now, the buyers don't come in and hold this thing, right? The buyers don't get trapped below. The market literally pulls up and then literally reverses right back down again, and we get one of these, right? V-tops, and it begins to grind down from there. These are tricky because you really can't sell into them very well, right? It's difficult to stand in front of that freight train, right? So it's difficult to call the top on that V bottom. A lot of times it'll spike up, pull back to the moving average once, twice, and you can slip your order in and sell right below it with that two-try failure. We've talked about that already. In this one, though, it literally V-tops and begins to grind down. Mark that trend line off that low, mark that channel off that high, drill down, find your swings, grab those traps above prior swings, get above the moving average. Buyers come in and try to buy it back up. When they try to come in and buy it back up, their stops are going to be gasoline for that move going lower. Again, it's a first test off the high of that channel. I'm not trying to predict that top. Okay, don't waste your bullets trying to pick tops and pick bottoms on this. Use stop losses. Trap in the opposite side of the traders, opposite side of the market, and use their stops as fuel. Target, of course, back down at that low. I think at this point, we've got a pretty good handle on it. One more here you want to keep in mind, right? One more as we go higher to sell it, and then we'll talk about going lower here. As we go higher, let's say we come back below that moving average. We pull back and we blast, right, off that EMA. Okay, what do we call those? 1, 2, 3 moves, right? That, of course, now, once the bears come in and jump off that moving average, mark that low, mark that high. You got it. Grab that first test off that high, whichever entry pattern we get at that point. Is that making sense, right? Can I get a hell yeah in the comment section? Maybe a thumbs up on the video tonight, right? So as we go up, we slip back below, we pull back to the EMA, the bears blast, right? And we look for that first test off that channel. All right, I think we have it all covered there as the market goes higher. But wait a second. What if this thing dumps here overnight? Can I sell it down here? Can I buy it down here? Absolutely we can. Let's grab a look at this now on the S&P. The S&P, of course, is very similar once again to the Nasdaq, right? We've talked about this as it goes higher. I talked about 3 different breakout patterns as it goes higher. We talked about the crown reversal. We talked about the double top. We gave you 4 different ways to sell this thing off the high. Keep in mind that contract rollover is on our radar here for tomorrow. Almost identical chart here tonight on the S&P. Now, where we leave off, we're trying to figure out now, as the market goes lower, what can I do to short this thing? How can I be a buyer as we go lower? Well, first of all, where does the market want to go? The market wants to go back and take out that 39.52, 39.42 level. So if I want to be a seller on this, I have to short this thing before we get there, or I have to wait until we break below it. Okay, let's talk about that. Now, first of all, if I want to short this thing as we go lower, I can still use that crown reversal. I can wait for that 1, that 2, and that trap and that short. I don't need a breakout to grab that reversal. I can also here, because we're testing that retest of that high, right, I can now look for that 1, 2, and sell it back down from there. Those same reversals we talked about up overhead, those are the same basic reversals you can look for here on the S&P. What I want you to be aware of, though, is what if we end up taking off at the downside now, right? What if we get back below this moving average, we pull over, and the bears come in and jump off that EMA? We call these 1, 2, 3 reversals. We know where the market wants to go, right? It wants to take out the other side of that trading range. So find that low, mark that high, drill down on your faster time frame. This is a 10,000 tick chart on the S&P, and we're looking for that short. Again, you're going to want that short before you get down into that area down here. All right. If we can't, we got to wait for a breakout as we go. Another one of my favorites would be that pop and grind, right? So we slice back below. We don't pull back and jump off the moving average. We begin to grind down, grind down, grind down. These are very, very simple patterns. Mark that low, mark that high, and again, look for those prior swings and get up and short that first test, right? We know where the market wants to go at that point. Those are some opportunities we have as we go lower, as we try to get that rotation off of that low. Now, let's say, for example, we take this market, we pull it back, we grab that, right, and we blast, right, all the way back down to retest the low now. What does a breakout look like as we go lower here? Okay, well, we talked about some breakouts going higher, right? We talked about 3 different breakout patterns going higher. So if we do find our way back at that low, make sure we pull back to the moving average and really jump off that moving average and give me a firm breakout through that low. This is not rocket science, right? We know this range is a magnet. We know this area is made of support. We have to see confirmation that sellers do want to break free of this trading range. If they can make it down to those lows, hold that pullback, and really jump off the moving average, great. Mark that new low, mark that new high, and grab that first test, right? Where do you think the bears want to go at that point? Where's the next big objective? The next big objective is right down here at 38.92 half, 38.83 half, right? That's where the bears would love to go. So if we do find ourselves at those lows, if the bears can pull back and really give us that blast going lower, great. Find that new channel by drawing off the low first, mark off that high, and don't miss that first test, right? Pretty easy stuff from there. Or maybe we see this market take a dump going lower and begin to grind down, grind down. Again, major news coming in overnight. This could easily pump up, slam lower, and begin to grind down. If it starts to grind down like that, you know the game plan. Mark that low, anchor off that big high, and stay patient. Mark those prior swings, wait to get up, trap in some of those buyers above the moving average for whatever reason. I'm still amazed how many traders get fooled by that. I made that mistake when I was a new trader as well. We're so bearish in that example. Anytime we see a strong move down, we know the odds are almost a guarantee they're going to retest that low. So go in, trap in those buyers above the moving average, off top of that channel, and use their stop losses for fuel for that move going lower. And again, they'll try to take out that next big objective as we go, right, as we go down. The other scenario here, which of course would be very, very extreme, is if we saw news come out overnight and the market just simply nosedived, right? You know, we come out tomorrow morning, or you're, opening up in London tomorrow morning, right? Whenever you get to your desk, if this market's made a huge move down overnight, what's the first thing you think of? It's way too low to sell, right? It's too low to sell. We don't want to chase it. Okay, big moves overnight have a very distinct kind of mindset to them. We have to let that market pull back. How far? Far enough to the point where the little voice in your head says, oh my goodness, maybe it's a reversal. What I'll usually do is go out and try to find some larger channels. Right? Try to find some larger channels by anchoring off some prior swings. But the key though is, if the market makes a big move down overnight, what you want to do is you want to get this thing to pull back deep enough to attract in more bears. And I always tell my students, right, again, look for those larger channels. That's one easy way to do it. But for the most part though, once the market begins to feel like it's bullish again, once that little voice in your head says, oh my goodness, maybe this thing is reversing, right when that little voice chimes in, that's usually when it's time to look for the rookies, the inexperienced traders, folks who don't watch my videos. Let them come in and get long on it. And then remember, strong move down, they're going to want to retest the low. Use those stops for that run back down to retest the low. Big move overnight. We're watching that right now because of that big news that we have overnight as well. So watch that move going lower here and don't chase it if it really makes that move lower. Now, how do we buy this market? We haven't talked about the buy side now as we go lower. As we go lower, what's the big problem? We now turn into a short-term bear and a long-term bear. Okay, so as the market goes lower here, I can buy down here, but really the way you want to do it is going to be that double top reversal. I really don't like the crown reversal in this situation, right? The crown being the one try, the two try, and that trap. Why? Because now we're both short-term bearish and long-term bearish. I like the crown reversal off the high, right? Because we're still long-term bearish. Does that make sense, right? I respect the buyers up here because we're short-term bullish, but at the same time, I can take that crown reversal pattern because we're long-term bearish. That changes though when I'm down here. So as we go lower here, remember, strong move in one direction. Let the bears retest. Again, we're trying to short that, right? Back to retest that low. Once they retest the low, now the bears got what they wanted, right? Now it's mission accomplished. Once the bears get their profit, remember, professional bears, right? The professionals are selling high, right? This will now be a place where rookies begin to sell. So trap in those rookies here, trap in those inexperienced traders. I like to use the two try rule to show me signs of exhaustion. If you want to look for a reversal, you need three things. One, a major turning point, right? Like a support level below a trading range. Two, you want signs of exhaustion. I use what's called the two try rule, which you'll learn all about in that free trading course I mentioned earlier. The two try rule is an easy way to see signs of exhaustion. The third thing you need for reversal is some sort of catalyst. And the easiest, the best catalyst is to run those stops. Because when you're stuck short and you see that big juicy signal, those sellers are going to get the heck out of the way and the market will often jump right back up into that trading range, right? So again, don't be afraid, right? As we're going lower, we may get that short going down, right? Retest that low and then 1, 2, and right back up into that trading range. There's no reason why we can't play this in both directions. Just remember, don't be selling into that low, right? Sell before that low and then look to trap in those bears, the weekend bears at that low and back up from there, right? Be careful buying off that low because it will be long-term bearish and short-term bearish, right? So keep it in mind as we go lower. That's the way you want to buy this thing as we come off the low of that trading range. How'd I do? How'd I do? Do you agree? Do you disagree? Do me a favor, will you? Let me know in the comments section, right? Am I crazy looking for those reversals? What do you think? I would love to hear your feedback and maybe what you're thinking for tomorrow in the comment section. Let's keep going though. How about some crude oil? Wrapping things up here tonight on the oil. Now remember, oil is very much news driven right now, and we have some very big news coming tomorrow morning. You've got that EU energy emergency meeting. Try saying that 3 times fast. Kind of a tongue twister there, right? So be aware of that news happening overnight, right? Now, 2 key insights here on the crude oil. One is the bear bias. We are long-term bearish right now. Look at a daily chart. Look at it. Look at a 4-hour. Look at a 60-minute. We are long-term bearish, right? Short-term right now, we have a range and we're rotating off the high. That is also very short-term bearish. So long-term bear market, short-term bear bias. That is a trading range. Markets love to rotate back and forth inside that trading range. We go lower, we pop up, and now we rotate back down again. A lot of times when the markets pop above a range and then rotate back down, a lot of times they kind of slingshot and they break out in the opposite direction. We call these slingshot reversals or slingshot breakouts in our trade room. So a lot of bearishness right now as we go lower. You know, really a lot of this is very similar to what we saw on the S&P and the Nasdaq. As we go higher, the buyers would love to buy some breakouts. Right? We talked about 3 different breakouts. As we go higher, the sellers would love to sell this thing because not only do we have a range magnet below us, but we're overall bearish, right? So breakouts going higher or reversals off the high. As we go lower, very similar, right? Buyers would love to buy off that low, going back up into that trading range. Be careful on those because, again, we are short-term and long-term bearish at that point. And, of course, the sellers, right? I mentioned this in last night's video. We really, at this point, expect all things considered, all things equal, if nothing new comes out, and again, we get some big news tomorrow, but it's looking like that $80 a barrel is, it's looking more like about 75 a barrel here before too long here. So overall bearish, bears would love to get that breakout as we go lower. We're trying to go lower here right now. Let's talk about what those breakouts might look like. Let's talk about what those reversals might look like. Now, in a situation like this where we go up and we begin to kind of tail off of, right, or slingshot out of that trading range, you definitely want to look for one of those pop and grind channels. These are very common when a market is slingshots the other direction because none of these buyers down here want to stand in front of that freight train. So if the market pops down, it begins to grind down, just mark off that low, mark off that high. Remember, all of that momentum is going to want to go up, right? It'll want to go up and come crashing right back down for you. So look left, find those prior swings, get up above some of those prior swings, get underneath the 21 EMA, get those buyers trapped in as come in, buy off the moving average, and use those stops for fuel for that retest of that low, right? Pop and grind. As we go lower, I like that one a lot. Or we keep going lower. We pull back to that moving average. We pull back and we blast, right? We jump strong off that moving average. A convincing breakout at this point of the entire daily range. We mark off that low, mark off that high, find that channel by drawing it backwards, and we go out and we sell. Again, traps, failures, pullbacks off the high of that. And again, we know where we want to go, right? $80 a barrel is a very, very easy objective. It's a big round number. Oil loves those big round numbers. Now, as we go lower here, right? Remember, if we come out tomorrow and we see this big move down, right? If it makes this monster move down, what's the first thing you think of? Don't chase it. And definitely do not try to pick a bottom on that, right? I don't care how far it's gone. It probably hasn't gone too far yet, right? Please don't make that mistake that I made when I was a new trader. What you want to do is you want to now look left, find some of these bigger channels out here, right? Try to get that deeper pullback. And again, these are a little bit tough to kind of anticipate because we don't know how big it will be tomorrow. But the reality, but kind of the key here is, the rule of this is you want to get this thing to come back up, get above the moving average. Right when you start thinking, wow, maybe this is a reversal, that's usually when it's time to trap in those buyers, use their stop losses for a retest of that low, right? And then from there, that's where you look for that 1, that 2, you trap in those weak hands, right? It's a great short right here, but it's a horrible short down there. That makes sense, right? We don't want to sell low. We want to sell high. So trap in those bears, use their stops as fuel for that jump right back up. Take out those highs, right, for a quick target going back up again. So keep that on your radar as we go lower. And again, as we go lower here, wait for that double bottom, right? The double bottom reversal is the one that you want to look for, right? It goes lower, let them retest, and then 1, 2, back up, we go from there. Let it go lower, let it retest. Again, I'm not trying to pick a bottom on this. Give the bears the benefit of the doubt, let them retest that low, and then rope in some of the weekends here. 1, 2, and then you can be a buyer from there, going back up into that trading range, right? I'm not trying to pick that bottom right there. It's too much bearish momentum. Let them retest, then trap in the rookies. That way professionals are taking their profit at that point and not reloading right into your long trade, right? Make sense? Okay, that's how you sell it, and that's how you buy it as we go lower. Going higher, pretty straightforward here, right? I want to see one of those 1, 2, 3 breakouts going higher, find that bull channel, buy that first test. Remember, first leg, third leg are symmetrical. Maybe it goes up, pop and grind, right? Pop and grind channel. We've talked about these before, right? Probably not going to happen, but who knows, right? We've got that maybe a big move up, right? Really monster move higher overnight because of the energy news overnight. Wait for that deep pullback, trap in those bears, go back up to retest the high, and then you know what I want there, right? You know that's exactly where you go in and rope in those weekend buyers and use their stops for fuel going right back down into that trading range, right? We've covered this, right? We covered these setups earlier on the S&P and the NASDAQ. So keep an eye on that. Or because we are so long-term bearish, we run up, we take out some of these levels up overhead, right? The buyers come back in. They try to buy it once. They fail to retest the high. They pull back lower, try to buy it twice, and we get a little trap above that high. Nice strong signal. We call these crown reversals. Very, very easy setups. But I'm going to warn you right now, these reversal setups take longer than you think. Okay, they're not going to take 5 or 6 minutes, right? They'll probably play out over a 20, 30-minute period. Because remember, the stronger that move higher, the bigger that reversal pattern needs to be, right? We're not looking for some small little 2 try and then short it back down again. Not with that big blast, right, going higher. Or we let them blast it, let them retest, and then you can get a lot more aggressive, right? Then it's 1, lower low, 2, stops are right there, and we're shorting into those stops, finding that new channel, right, and selling that top of that channel, right? So as it goes higher here, right, as it goes higher, looking for that double top. Again, let the buyers get what they want and then rope in those buyers in and short that sucker. Again, I'm repeating a lot of this. We talked about most of this on the S&P and the NASDAQ, right, earlier on. So now we get a pretty good idea there, right, how to buy it as it goes higher, how to sell it as it goes higher. Also, too, don't forget, if we do make a run up, okay, and then we V-top, right? We kind of V-top and begin to grind down like that. These are easy. Mark that low, mark that high, right? Find that first test and grab that short from there. These are pretty common. These are pretty common, especially when you have a long-term bear trend, right? Especially when that trend, that the long-term trend is bearish, right? We get those big pops up, a lot of big money bears up there waiting to sell into it. Not my style, right? That's not my style of trading, right? It could be yours, right? Not my style of trading though. As it goes up, we can't just sell into it, unfortunately. It's just too strong. If you're gonna sell it here, you're gonna sell more as it goes against you. That's a deep pockets game plan for a very, very well capitalized trader. For the rest of us though, all of us, right, smaller trade accounts, retail traders, wait for that pop up, and then if it rolls over and begins to grind, then don't miss that first test off that channel. All right, guys, what do you think? Am I on the right track with this oil? Do you agree? Do you disagree? I would love to hear your feedback. I would love to hear what your game plan is, or what you disagree with me on this oil. And hope you guys enjoyed the video here so far. Game plan is ready to go for crude oil. We got the oil, the NASDAQ, the S&P is all prepped up. What will happen overnight, right? That's the big variable right now. Tomorrow morning, though, no matter what happens overnight, we have a game plan to make some money. Hopefully, I'll see you there tomorrow, every morning, 8 o'clock Eastern time in our trade room. I would recommend start with the free classes first. Okay, you can, again, the link I gave you was right in the upper right-hand corner of this video, or I'll put all the links in the description of this YouTube video. Start with that free class first, learn the basics, get your feet wet on that, If you have any trouble getting in, any questions about it, call that toll-free phone number, use that live chat tool, drop me a comment in the comment section, and I can help you out along the way. But start with the free class, get your feet wet there, get that ball moving forward, get that momentum on your side there, and that way you'll be ready to go, primed up and ready to go for trading with us in the near future as a brand new student. All right, you're gonna love that free class, and of course you'll love trading with us every day in our trade room. All right, guys, that's it for now. If I don't see you tomorrow morning at the opening bell, we'll come back next week. Got a full week ahead of us next week, and next week we should finally shrug off these summertime blues and finally get ourselves into some of the best price action of the year. If I don't see you guys tomorrow morning at the opening bell in the trade room, I'll see you same time, same place back here tomorrow on Monday evening after hopefully a very restful weekend. Guys, I'm out of here for now. Rest up. Busy day tomorrow. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.